Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An interesting and complex pattern yesterday. It was an indecisive spinning top that was also a bearish harami, if only just, but also a possible shooting star pattern, type 1 bearish, due mainly to the long tongue on top and the limited tail below. Now, despite this long tongue, the 50% Fibonacci line for 2023 at 108.64 still capped the market on a closing basis, though prices were once again still over the bright red highlighted broken upper time, currently 107.94, of the late December 2023 to mid-March 2024 bearish shift pitchfork, as well as the medium moving average, currently 108.08. Further below, we have the combined short, medium and long moving averages, currently 107.81 and 107.86 respectively. Overall, we are still sitting on top of the recent break up and out of the bright red bearish shift pitchfork, though it has not really been exploited, and I'm continuing to wonder if the market will repair it. Further overhead, we have the 50% Fibonacci line, the January 2021 to September 2022 move at 109.44, and a dark blue upper trend line currently at 110.08 of the mid-April to date ascending expanding wedge pattern. This is quite a steep pattern, and I would thus suggest paying further attention to the 50% Fibonacci line and to the shallow descending neckline extension to the July 2017, November 2018 head and shoulders pattern, which is currently at 110.12. So far today, well, an attempt lower, but limited. We are not near the medium moving average as yet, and we are still capped by that 50% Fibonacci line at 108.64. Cable, aka sterling against the US dollar. An indecisive spinning top pattern yesterday, but with a longish tongue, and also seen as a bearish dark cloud cover pattern. There's a couple of key features about yesterday's action to note. Firstly, the market penetrated on the upside through the overhead bright red highlighted July 2021 to date downtrend, currently at 127.68, before pulling back down to close a little under it. Secondly, I had previously pointed out on many occasions how the market had broken up and out of the early March to mid-May bear channel. This break higher left us a primary target X for this pattern up in the 128 even area, and a secondary harder to reach target X1 up in the 128.95 area. Yesterday the market reached the primary target X. Overall, the market has now seemingly stabilized over the combined 50% Fibonacci line of the June 2016 to September 2022 move and the September 2020 low, both at 126.99. We now have further up the November 2020 low at 128.52 and the March high at 128.93. Meanwhile, further down is the mauve highlighted and flatlining medium moving average, currently 126.32, with the short medium moving average currently 125.92, a little under that. So far today, well, an attempt higher up to the bright red downtrend, but not really pushing through it and been beaten back a little bit. Euro sterling. An indecisive spinning top yesterday, but could also be seen as a small bullish harami as well. Prices continue to close below both the lower purple highlighted trend line, currently at 85.48, of the late January to late May expanding wedge pattern, as well as the combined support of the December 2022 low at 85.45 and the December 2023 low at 85.47. Additionally, was another lowest low since August 2023 and a second consecutive clear close below the bright red neckline, currently 85.11 of the May to August 2022 head and shoulders continuation pattern. This continues to be a significant move, and the question now is whether this move lower will continue to be exploited and whether I should put targets now on the downside. The next supports below are the lows of mid-March and mid-February between 84.96 and 85.02, and after this the April 2021 low at 84.70. Yesterday's action once again penetrated these but did not close below any of them. As for today, a higher open and a move up to test the underside of the bright red neckline, but really failing to punch clear through it, and prices have since turned lower, below the lows of February and March and towards the April 2021 low 84.70, and maybe cementing, depending where it closes tonight, my idea of whether I should put targets below or not. US dollar against the Japanese yen. An immediate countering key reversal up yesterday, plus a bullish engulfing pattern, and even, I suppose, a hanging man type pattern. And that looks bullish as well. All after the previous session's bearish engulfing pattern. It was yet another consecutive close over the bright red middle time, currently at 156.92 of the July to December 2023 bullish Andrews pitchfork. Overall, we are still in between the purple highlighted middle time above, currently at 161.14, and the lower time below, currently 147.06, of the large February 2022 to January 2023 bullish shift pitchfork. We're also in between the middle time above, currently 158.61, and the lower time below, currently at 154.32 of the more recent mid-March to early May bullish Andrews pitchfork, highlighted in dark blue on my daily chart. A little way below is the June 1990 high at 155.78. So far today, well, not much, but it does look like the market's trying to stabilize over the bright red middle time right now. US dollar against the CNH, the offshore Chinese yuan. An immediate countering bullish engulfing pattern yesterday after the previous session's reactionary bearish double. It looks a lot like the bearish double was a blip, an aberration if you will, in an otherwise overall move higher. The market is getting higher and clearer of the mess of moving averages below, consisting of the short moving average, currently at 724.03, the slightly rising short medium moving average, currently 724.33, and the important long moving average, currently at 723.40, plus the dark blue highlighted upper trend line extension to the January to April ascending triangle, currently 723.99. Looking above, we are now well into a congestion area dating from mid-March to late April, between roughly 724 to 727. So far today, well, an early dip, but since then a recovery and a move higher to the highest since late April, and towards the periphery top side of that 724 to 727 congestion area. US dollar against the Mexican peso. A reactionary combined key reversal up and bullish engulfing pattern yesterday as prices took support from a combination of the 2023 low at 1661.94 and a dark blue highlighted middle time currently at 1665.64 of the breached but seemingly repaired December 2023 to January 2024 mildly bearish shift pitchfork. The move higher punched up through and closed over the very recent May-based downtrend, currently at 1674.48, as well as the short medium moving average, currently at 1675.73. We now have resistance at the congestion at 1688.97, which is coincident right now with the flatlining medium moving average, and that's currently at 1688.74. Overall, we are traveling well within the dark blue bearish shift pitchfork, and the recent declines in May counter to a large degree April's monthly key reversal up. Now, so far today, a limited attempt higher, but then a pullback. We went up to test the top side, but pulled back to the support of the breached May-based downtrend and the short medium moving average at the moment.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.